that's a good way to start it off. Maybe we'll jump into the different types of reverse mortgages. And so for a traditional or forward mortgage, you got your 15-year or 30-year, and then there's a whole wide range of different lenders. And yeah, I don't know if you just want to give us an overview of like, is there all the different flavors and colors that the reverse mortgages come in?
Okay, so let's go back to the traditional or forward mortgages. For many people, of course, they're making a payment on a regular basis. And many love the 30-year fixed rate mortgage flavor, right? I guess it's a common product that a lot of people use to either refinance their home or to purchase a home. And so it's a fixed rate. And the reason why a fixed rate is very good for a lot of people is because they know exactly how much they have to pay
Right.
in principal and interest every month. On the reverse side, it's reverse. So people actually like the adjustable rate reverse mortgage better than a fixed rate. And the reason, there's a lot of different reasons. I guess the main one is that there's so much more flexibility in how the borrower can receive their funds. So they can choose a line of credit. And I think if your listeners don't know, your viewers don't know, the most home equity lines of credit are adjustable rate products, right? So yeah, if you have a bunch of money that you can draw out whenever you need it, but the rate is adjustable. Like now, some banks have like the teaser fixed rates for a short period of time, but if you kept the loan for its full term, then you're going to see the rates go up and down at some point.
Yeah.
And that's scary because you don't know how much you're going to pay every month on a traditional mortgage. But on the reverse, having that adjustable rate also gives you the ability to have a line of credit. And the line of credit is a really cool feature of the HECM, I should say, the HECM reverse mortgage. I'll go into that later. But it also allows you to have monthly payments made automatically to you on a monthly basis. Or maybe if you need a lump sum, say you need, I don't know, $20,000 to do some home repairs, then you can request that too. And then go back, relieve the rest in a line of credit. Or let's say you needed that $20,000 and you need $500 a month too, and you want the remainder in a line of credit. You can do all three. So provided that you have enough funds available to move around like that.
Yeah.
But, as you can see, the reverse mortgage has a lot of flexibility. And let's say a borrower chooses the line, they can have that line until they permanently leave the house. So even if they live to 110 years old, if the line is funded, they can still access the money from there. Whereas with the traditional line of credit product from the bank, you have like a 10-year draw period, right? Unless you refinance into another, line of credit. So that's why people love the adjustable rate. And I rarely do any fixed, rarely. I don't even know what the last time I did one. It's all adjustable.
Wow, that's really interesting. And, so for me, obviously, learning more about this, is helpful because, as you said at the top, it's like a lot of misinformation or a lot of unknowing, and kind of like you said, even when your first experience was like, no, I don't want to learn about that. Like, so I really appreciate you just like breaking it down, making it plain and simple for us to understand. So just, curious, who would be eligible to qualify, or what would be some of the qualifications that need to be met to even start the process? Like, is there an age? Is there a level of equity requirement? Or does the home have to be a certain value? What are some of those things?
So a borrower on a HECM, let's just focus on the HECM because that's like almost all of our borrowers are HECM borrowers. That's the government insured reverse mortgage, FHA insured. So you have to be at least 62 years old at the time that the loan is closed or when you make the loan. And as far as property types, single family is usually the least complicated. If you have a condominium, then condo approvals are required. So sometimes it takes a lot of work. It could take even up to a year for the process, but most people that we help, I think, have single family homes.
Hmm.
And then as far as equity goes, rates go up and down, and so does the principal limit or the loan amount on a reverse mortgage. So my advice to anybody listening is, if you're interested, contact a reverse mortgage specialist or someone like me, and we can actually run numbers for you to see what the current principal limits would be in your scenario.
Mm-hmm.
Yeah, because they change it, and yeah, it's better to track what the current situation is when you're ready to go. Yeah.
So it's not the type of thing where you need to maintain 20% or 25, 30% of equity within your home. Like, as far as like, you can borrow up to let's say 80% in the reverse mortgage. Like, there's no definitive percentages for equity?
So we have this, and you actually can look it up on HUD.gov. There's this principal limit factor table. It's a very long spreadsheet. It goes by ages and it goes by interest rates. Okay. So I think we have it all the way from, like, I don't know, maybe 1% all the way to, I think the highest I saw was maybe 12 or 13%. And then it has all the ages and then all of the percentages. So it's a very complex type of calculation. So it's really hard to say how much equity you have to have in the home. At one point we were saying 50% on average, just to throw out a number. And now I wouldn't even say that because the rates are high, so it's just good to check. But the reverse mortgage, what it's going to do is it's going to give you a portion of the equity in your home. So, and the idea is, if you're younger, you have a longer life ahead of you. So if we're not collecting mortgage payments every month, then we're letting the loan balance accrue with interest and any of the monies that the borrower used. So there has to be space for that loan balance to grow, right? So we're keeping track. We're seeing, okay, they borrowed this much, and then, this much in interest. And then every month we're looking at, the balance, and if they're not making payments, it grows. So if they're younger, there has to be more space to grow into. And that's why we don't give as much to a 62-year-old as we would to a 90-year-old.
Right.
So if you're 90 years old, your life expectancy is shorter. So we're going to give you more of the cash because we don't need all that time to accommodate growth on the loan. So I know that was a little technical, but so the younger you are, the less money you'll receive compared to someone who's older.
Yeah.
Gotcha.
So you mentioned 90 years old as just an example. Are there like top limits? Like, oh, you're too old now? Like, I know like some different products have that type of stuff. Okay. So it's pretty much 62 is the minimum and it's any age after that.
I think the oldest I had was 102.
Wow.
They did
amazing.
Wow. 102. Yeah. Yeah.
Wow.
The next one was 101, and she's still active. She still writes books and does book signings.
The opinions and statements presented on this show are for general information only and are not intended to provide specific advice or recommendations. Never make any investment or financial decisions based on information offered on this show without first consulting your financial, legal, or tax advisor. All economic and performance information mentioned on the show is historical in nature and is not indicative of any future results. All indices mentioned on this show are unmanaged and cannot be invested in directly. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Lastly, all opinions expressed by Jason Cutitta and any guests on the show are solely their own opinions and do not reflect the opinions of or are endorsed by ToBA Financial. For Jason Cutitta, investment advisory services are offered through ToBA Financial LLC, a registered investment advisor offering advisory services in the state of Hawaii and in other jurisdictions where exempt from registration.